Hi everybody and welcome back to Mindfully Trading, where I share educational videos about how to trade the Forex market, as well as an insight into my journey as a Forex trader. Last week, I shared a video with you that broke down a trade recap taken for pound dollar where I made $1,000, and it was utilizing my Fibonacci retracement levels that really allowed me to get an edge on my accuracy. Well, I've had a lot of requests from subscribers asking more about those Fibonacci levels, and that's what I'm going to show you in this video today. So if you are looking for a way to improve your accuracy for day trading, I'm going to show you the exact levels that I use on my Fibonacci retracement tool. I'm also going to show you a complete step-by-step recap of a trade taken this week, another winning trade taken on pound dollar, where I managed to make 1.5 times my risk, which equated to around about $750 on my account with the 5%ers. So keep watching because we are going to go through the whole process, but I just want to share a quick shout out to the YouTube channel Inner Circle Trader, because that's where a lot of the inspiration for the Fibonacci retracement levels have actually come from, is from his mentorship program, which is a free educational resource on YouTube. So if you are new to that, do a search for Inner Circle Trader and drop a comment on the video you watched saying that Mindfully Trading sent you their way. But as always, all the software, all of the resources I'm going to be using in this video will be linked in the description below. Please make sure to like and subscribe if you're new to the channel, and let's get straight into the video. Before we actually dive onto TradingView, which is the charting platform that I use and what I will be using in this video to show you the Fibonacci levels, I just want to show you the trade that I took. So this is in my broker that I have. It's in MetaTrader 5 platform, but the broker is through the prop firm, the 5%ers, the prop firm that I am using. I am currently enrolled in their high stakes program. If you want some more information about them, I do have a link in the description below, but they are a brilliant way to be able to make money as a trader if you struggle with lack of capital. It's basically where you choose a funding program and you have to pass a challenge to prove your worth as a trader. If you can respect the rules and hit the target, then you are able to trade a funded account and you take a share of the profits. Now, what's really amazing about the 5%ers is they've removed any kind of time deadline from their programs, which means they've removed a lot of pressure from your shoulders when it comes to taking these challenges. So I definitely encourage you to check them out if you feel that you have a proven trading strategy, if you are profitable, and if you think you can take your trading to the next level. But this is the trade that I took. I traded pound dollar. Now, I did do a weekly outlook at the beginning of the week. I'll link to that above, giving my kind of prediction for the market for this week purely for the pound dollar. And I felt it was going to be a slow pullback week. Well, Monday and Tuesday, we have seen a very slow pullback. Not much has happened. I took this trade on the Wednesday. And as you can see, it was a sell, so it's actually against my weekly bias. My overall bias is long because we're in an uptrend, but I thought I'd take a scalp of the pullback, and it did pay off. I managed to hit my take profit, and as you can see, I managed to make just over $750 on the account. And that is using a combination of key levels, market structure, and Fibonacci retracement levels. I'm going to go through the entire process with you now on TradingView. So before I can actually talk to you about those all-important Fibonacci retracement levels, it's really important to have the correct perspective, to put it into perspective on how I use these levels, because I don't simply drop the Fibonacci retracement on the charts and take a trade straight away. That's not how it works. They have to work in confluence with other factors to be able to justify an eligible trade. So the general process that I take to look for a trade is I start off on a higher time frame, the daily time frame. It has a high authority. It's respected by a lot of banks, a lot of institutions. It carries a lot of weight and authority. And this is what I did my weekly outlook on. So I'm not going to talk too much about it because I did go through that in another video. So just make sure you watch that if you want some more information on the background and the foundations of this trade plan. But the key things to note here are the levels I've got drawn out. It might look a bit messy. I just use price action. So these are all drawings that I have put onto the chart. Namely, these black horizontal lines are institutional price levels at significant key levels in price, the whole and the half dollar. This orange shaded area is what's called a fair value gap on the daily. And these boxes are using those Fibonacci levels. Now we will come back to those in a minute, but I'm going to zoom right in on most recent price action so you can see where we're at. So the week opened here on the Monday, and Monday, Tuesday, I didn't take any trades because, as you can see, we were just consolidating. We were ranging down here. So why did I decide to take a trade on Wednesday against the overall bias? Well, there were a few factors involved. And the best way to understand that is to drop to a faster time frame. The time frame that I use to execute my trades on is the 5-minute time frame, and that is what I was looking at. Now you might notice if I zoom right in on the 5-minute, this section here is the Wednesday morning. So let's just remove all of the following candles so that we have gone back in time to Wednesday the 19th of July in the morning, another brilliant feature of the TradingView platform. And you can see we have this massive candle down. Now that is a result of CPI news that was released on the pound on the Wednesday morning, which was weak. So it meant that the pound saw a big drop to the downside. When that came in, it was evident that there was a lot of momentum going down for pound dollar. And I knew that from the start of the week, although overall we were up, we had this very sideways price action, very choppy. We tried to dip up on the Tuesday, but it failed and it dropped below Mondays and Friday. So in confluence of that structure with that news release, I thought there was a very good chance that price was going to have a significant drop lower to pull back to then find some kind of grounding to build up a case for a long. So where is price likely to fall to? Well, that's where the Fibonacci retracement levels come in alongside key levels. And that's what this box represents. It's a Fibonacci level drawn from the 4-hourly time frame. I thought there was a good chance price would drop down to that level. So I'm going to skip this on to the moment in time I took my trade and talk to you about the exact process I used using these Fibonacci levels. So I've moved the candlesticks on to 10 o'clock in the morning GMT. As we had this huge drop down, it created a gap in price, and I wanted to just see what would have happened during the London session before I actually looked to take a trade. So I decided to wait until the closing 4-hour candlestick to just help me to plan the trade. Now, the closing 4-hour candlestick was a strong bearish candle down, and what I was interested in when I looked at the charts just after 10 is that we had this drop down, which showed me the momentum was there for short. We created a low here. We had a pullback, and then what was the most key part of this information is that price broke the low here and it closed below it. So what that meant is we had a new lower high, which is this level here. That's in confluence with the daily structure that I've already gone through, and also this key institutional price level. Price has broken this. We kind of consolidated along this level, and then it's made a new lower low. So it's trending down. We've got the institutional price level above price. So that acts a bit like a psychological barrier for price to push up more. And based for me on this strategy, historically using probabilities, the probability is price is going to just continue trending lower because it's going to be drawn to the next institutional price level and also the key levels and key structure from the higher time frame, which is this daily Fibonacci level. But what are these Fibonacci levels I keep talking to you about? Let's have a look. I'm going to zoom right in on price action. The crucial step that we've just gone through is this price action here, this structure, this low, this pullback high, and then the lower low. And all I'm going to do is click on the Fib retracement tool. I have it down here on a shortcut. If you don't have it, it'll probably be up here. If you use your arrow, you can tend to find it, but it's the Fibonacci retracement. And I'm going to go from the high of that pullback. Because I'm looking for a short, I'm looking at the most recent lower high, which is this one. And I'm using the bodies only, so I'm ignoring the wicks. I'm just looking at where price closed. People have asked me why I do that, because it has just worked for me. It's always good to just test out different varieties if you're not sure for yourself, but for me, for the strategy that I use on pound dollar, it works to use the bodies. And I drag that down and I drop my line at the lowest body in this trend, which was this point here. Now this creates these lines, and these will not be the generic ones on TradingView. These are the ones that I have created and saved. So let's have a look at the settings for those now. So I've opened up the settings for the Fib retracements and I've clicked on style, and this is what I have inputted to customize this information. So if you have something different on TradingView, you're welcome to use this. Screenshot this screen now, save it and compare this to your own, or however is best for you, make a note of them. But these are the levels that I use. So the 0 is the lowest point here, the lowest point of the move. The 0.705 is this middle line here. The 0.62 is the one below it, and the 0.79 is the one below that. That creates these three levels, and they are using percentages. It's 62%, 70%, and 79% of this move from 1 to 0 or A to B, from the high to the low, and they are the three levels, the three optimum trade entry levels that I look for price to retrace back to in order to get into the trade. Now these levels have been inspired by Inner Circle Trader, as I mentioned at the beginning of this video. Stereotypically, there are loads of different Fibonacci retracement levels. Some people prefer to use the 38% level, which is a lot lower down. Some people use the 50% level, which is here. And then these are the three that I have been using, and they have just been working really well. So as part of my plan for this, I always set my entry at the lowest point, which would be the 62%. So if it was a long, it would be the highest point. Because I'm looking short, it's the lowest point. So my trade plan meant that I placed my forecast here at 1.2952. I was quite happy with that because it was very close to the institutional price level. So I felt that we would get a retest of that level anyway. I didn't want to go too much above that because I think that the institutional price level will hold. But still, my stop for this strategy has to be above the high. It's as simple as that. Now, I don't usually like using a large stop because obviously we like to get more money, and if we use a larger stop, we have to use a larger target, and it just makes the trade a little bit longer. But in this case, the high was at about 21 pips, and I was going out, so I couldn't watch this closely. So I wanted to give the trade some room to move. So I actually used a large 30 pip stop. This is one of the largest stops I would use, but you can get a lot of range with pound dollar. And considering we had this huge drop down, I thought there was a chance it might pull back up here to just fill this gap a bit. So I wanted my stop to cover that area. And for a target, I usually look for a pass down past the low of the fib, but in this case I have to look for a minimum of 1.5, and the range was there because that was just before the next institutional price level. So I was very happy with my entry, my stop, and my target, and this is what price did. Now, it doesn't always happen that way, but as you can see in this case, I pretty much had a perfect entry if you take into consideration spreads, which at the moment have been really good with the fivers, and also with my live account with FXView, my personal trading account. So I had no issues there. But as it turned out, I mean, that's a really, really nice entry. It didn't even tap up to this 0.79 level. Price went up to the 0.70 level at the highest, and then it came down, which is why I always set my stop at the closest level to the low in this case. If you set a plan too high, you might miss the entry and you might miss the move. But in this case, in terms of a stop, in hindsight, naturally I could have obviously had a smaller stop, which could have resulted in more profit, but I'm not too worried about that because the main part of this for me was the win. But you can see how these Fibonacci retracement levels work. So we have the low, the pullback high, the lower low, price pullback to the optimum trade entry levels. Triggered me into the trade, and then it went straight down to my target. And it's as simple as that. If you are a complete beginner to trade in the Forex market, I have got an ebook that's due to come out hopefully over the next couple of months. I have got a lot on. I'm currently 30 weeks pregnant, so time is A little tricky for me at the moment, but I do have an ebook that's coming out. It's going to be called something like Forex Trading 101. It's a complete beginner's guide to trading the Forex markets. So if you're interested in learning more about trading the Forex market, as well as an insight into some of the key lessons that I've experienced over the years from a variety of different mentors and courses myself, I will include a link where you can join the waiting list for the ebook when it's published. Meanwhile, if you've enjoyed this video, be sure to let me know by hitting that like button, and don't forget to subscribe to the channel below. Any questions, any comments, do leave them below. It's great to hear from you, and I will get back to you as soon as I can. I always aim to get back to all my comments, and I'll catch you in my next video. Thanks for watching. Bye.